Can LLC losses offset personal income? Yes, LLC losses can offset personal income, but it depends on your business activity and tax status. Since most LLCs are taxed as pass-through entities, losses are reported directly on your personal tax return. This means if your LLC loses money, those losses can reduce your taxable income from other sources like wages, investments, or rental income. The IRS does set limits. To qualify, you must actively participate in the business and run it with a genuine profit motive. If the LLC is classified as a hobby, you can't deduct losses. In addition, passive activity loss rules may restrict deductions if you don't materially participate. If your losses are larger than your allowable deduction for the year, you may have to carry them forward to offset future income instead. The short answer is this: yes, LLC losses can lower your personal taxable income, but only if you meet IRS requirements for active participation and business intent. Zen Business can help you form your LLC and keep it compliant so you can maximize legitimate tax deductions. And if you want a step-by-step breakdown of LLC basics, you can also download my free guide on how to set up an LLC. That link is in the description too.